BillMeLater was one of the first Bill Now Pay Later services I know of, which was later acquired by PayPal in 2008 and rebranded as PayPal Credit. I was actually a full-time employee there during that time. The service allows customers to make purchases and defer payment until a later date. And now with Apple Pay Later making headlines, it's clear that this trend is here to stay. But what exactly is BNPL? How does it differ from a credit card? And why would it disrupt the credit card market? In this video, I'll break down the BNPL process and give you everything you need to know about this growing trend in fintech. So let's get started. First, let's talk about credit card. I used to think that Visa is the credit card company, and it turns out that this is one of the common mistakes that people make. Visa is not credit card. So if you, the consumer, buy a pair of shoes from Walmart using a Visa card, Visa doesn't even know who you are. Visa does not work with you as a consumer, nor does the merchant. Visa only lives in this ecosystem to connect the issuing bank to the acquiring bank. So when you go pay for your shoes, you think it's a very simple process. You give the credit card to the cashier and the cashier charges your card. But it turns out there is a lot of parties that money passes through. Behind every credit card transactions, there are 5 parties. There is the consumer who has the card. There is the issuing bank that issued them the particular card and is taking all the risk. If that consumer goes bankrupt, can't pay their bills, the bank is on the hook for that. Then there is the network which provides the infrastructure by which the issuer issues the card, such as Visa or MasterCard. Then there is this acquiring bank. An acquiring bank is a financial institution that processes credit card or debit card payments on behalf of merchant. When a customer makes a purchase using a credit or debit card, the acquiring bank receives the transaction details from the merchant and then routes it through the appropriate card network for approval and processing. There are even some pseudo-acquiring banks like Stripe and Square. They are not really banks, but they acquire lots and lots of merchants so that they almost act like an acquiring bank. And then there are the merchants. What Visa does is they let the issuing bank talk to the acquiring bank. Let's walk through an example. You have a credit card which might have been issued by, say, Bank of America. Bank of America works with predominantly Visa. Now Visa, they sit in between the issuing bank, that is Bank of America here, and acquiring bank, which signs up a merchant like Walmart. When the consumer here buys the shoes from Walmart, what actually happens is they give their credit card to Walmart point of sale system. A point of sale system is that big machine that the cashier or you swipe the card. Walmart point of sale system then sends that to the acquiring bank, say Chase. Chase sees the first digit of the card is a 4. 4s are issued by Visa cards, 5 by MasterCards, 3s are issued by American Express, and 6 is Discover. In our example, it starts with a 4. So it sends it to Visa. Visa says, the next 5 digits actually denote the identification number of the issuer. That's Bank of America card. So Visa then sends that full card number, the merchant name, and the dollar amount to Bank of America. And then Bank of America has to make a decision of, do I approve this transaction, yes or no? Bank of America verifies that the customer has sufficient funds and say it thinks it's actually you, there is no fraud going on. And Bank of America tells Visa to approve the transaction. Visa then tells Chase that the transaction has been approved. Chase tells the point of sale system at Walmart, and the point of sale system prints out that receipt. Important thing here to note is the middle 3 here get 0 data on what items are being bought. That data is SKU. SKU refers to a unique identifier code assigned to each product in a company's inventory. SKU level data can include information such as product name, price, category, and other attributes. In a typical credit card transaction, SKU level data is actually only available to the merchant. The issuing bank, credit card network, and acquiring bank typically do not have any access to this level of detail. So if I use my credit card to purchase a laptop, the issuing bank, card network, and acquiring bank may not know what specific item I purchased. They may only see the merchant name, transaction amount, and possibly a general category of the purchase, such as electronics for a laptop purchase. SKU data is typically not shared with all parties in credit card transaction due to privacy and security concerns, because SKU level data can potentially reveal sensitive information about the consumer's purchasing habits, which can be a breach of privacy. However, BNPL companies have access to SKU level data because they work directly with merchants to facilitate purchases, which allows them to capture more detailed information about the items being purchased. This SKU level data can be then used to create more tailored financing options for customers, which could potentially disrupt traditional credit card financing models. By understanding what specific product customers are purchasing, BNPL providers can offer more personalized payment plans, such as offering longer term or more expensive products, or offering different payment plans for different type of products. In a typical BNPL transaction, there are four parties involved. The consumer is the person making the purchase and using BNPL as a payment method. For example, a consumer may use BNPL service to purchase a new laptop. The merchant is the business or retail selling the product or service to the consumer. For example, the merchant in the above scenario could be electronic store selling laptops. The BNPL provider is the company that facilitates the payment process between the consumer and the merchant. They offer the option to pay in installments and typically charge fees or interest for their services. Now, there are many BNPL providers: PayPal Credit, Afterpay, Klarna, Affirm, and now Apple Pay Later. Then there is this financing partner, which is the financial institution that provides the funds for the BNPL transaction. They work with the BNPL provider to approve and fund the installment payments. Financing partner of Apple Pay Later is Goldman Sachs. Now you might ask that Apple has so much money, so why does it need a financing partner? While Apple is a very successful company with a large cash reserve, it is not a bank or financial institution. Therefore, it may not have the regulatory and legal framework in place to offer financing and lending services directly to its customers. By partnering with financing partner, Apple can leverage their expertise and infrastructure to offer BNPL services while remaining compliant with relevant regulations. Partnering with financing partner can help spread the risk of lending money to customers rather than Apple taking on all the risk itself. In this scenario, say the customer chooses to use Apple Pay Later BNPL service to purchase a laptop from an electronic store. The merchant is paid in full by Apple Pay Later upfront for the laptop, while the customer pays back the cost of the laptop to Apple Pay Later in installments over a set period of time. The financing partner, in this case Goldman Sachs, provides the funds for Apple Pay Later to pay to the merchant upfront and then collects the payments from the consumer over time with interest. The BNPL provider acts as an intermediary between consumer, merchant, and lender. The provider pays the merchant for the purchase upfront, while the consumer repays the loan to the lender in installments over the set period of time. The BNPL provider earns revenue by charging the merchant a fee for offering BNPL as a payment option and by charging interest or fees to the consumer for the loan. With the rise of services like Apple Pay Later, it's clear that BNPL trend is here to stay. The possibilities of BNPL are exciting, and we'll have to wait and see how the credit card industry adapts to this growing trend. Will it be able to keep up, or will BNPL change the game? Only time will tell.